The real estate markets here in the Treasure Valley get kind of wonky, but also kind of stay the same for the month of October of 2023. However, seasonal patterns are also starting to rear their head right here in the greater Boise, Idaho area. Have you been thinking about buying, selling, or investing right here? Then this is a video you definitely do not want to miss. Let's see what happened in our real estate markets for October 2023. Welcome to another edition of Mikey's Monthly Market Updates. I look forward to being your guide. Well, welcome back after that quick break, everybody. Mike Petras here with MPRE Residential, powered by NextHome Treasure Valley. And again, welcome to another episode of Mikey's Monthly Market Updates for October 2023. Now, if you are new to this video, this does cover what's happened on a general basis when it covers Ada and Canyon counties right here, which makes up mostly the primary of the Treasure Valley real estate markets here in the greater Boise, Idaho area. So if you are looking to buy, sell, or invest, or have further questions regarding any of this data, feel free to reach out to me. Feel free to give me a call, shoot me a text, send me an email. We'll be more than happy to go further into detail regarding these stats or be able to help you in your transaction process. So let's go ahead, let's get to it and dive straight into Ada County statistics like we normally do. All right, Ada County. Well, taking a look at this graph, we can actually see that, well, really has not much changed since last month. And we're actually sitting at $539,990 overall in the median home sold price for the overall month of October of 2023. So as mentioned in my previous video, I kind of felt that because of the data, the way that it was going, things would more or less kind of stabilize themselves, maybe through the holiday seasons, kind of dip down a little bit. We are kind of seeing that in some aspects, but in other aspects here in Ada County, as we get through these slides, you're going to notice that it's definitely changed. But if we're looking at what has happened comparably, say to January of 2022, when things started kind of going up before the market correction hit, late May, early June of 2022, started coming its way back down to 2023 when we started going back up again, because again, every reaction has an opposite and equal reaction. And just like the pandemic, when we had basically zero inventory and we had a huge buyer's demand, which completely rocketed up the prices here in the Treasure Valley, they did come back down that 20% that we are familiar with to January 2023, when the market correction kind of generally ended itself. But if we're taking a look all the way from the $540,000 from January of 2022 to today's $539,990, we're negligible. We're talking about $10. So it's not really going to do much or say anything significant. But if we are looking at that market correction price, when we're sitting at the 602,250, all the way down to where we're at today, we're down 10.33% since then. But again, look at what we had in red right here when we're sitting at 487,495. Now, this is when the market correction really kind of stopped here in the Treasure Valley. Ada County was a little bit further on down the road in March. Sorry that I didn't mark that out. But if we're looking since that point, we are up 9.72%. So for a lot of people that are like, well, you know, the Treasure Valley market is going to continue to come down, all this kind of stuff. Well, honestly, the data is showing differently. We have been on the way up since then. So this market is definitely corrected. But Mike, you know, the mortgage interest rates have been out of control. How is that possible? Well, we're going to go ahead and get into that a little bit later on. So go ahead and stick around for that explanation towards the end of this video, when I also give you the best strategies if you're looking to buy, sell, invest, or even rent, technically, here in the Treasure Valley. But let's go ahead and let's roll through and take a look at the next slide real quick. And this is a 6-month breakdown of what's really been going on. So we know that over the 6 months, really till about June, we were on that way up, you know, looking at the 9.72 that we have been up since the beginning of January 2023. But now kind of look at where we're at. We can see that we went up, kind of went down, went up, down, up, down. So we're seeing that justification for the stabilization that I think is actually going to probably even ride us through the holidays. Now, historically, during the holiday seasons, we see prices come down a little bit. And actually, if you're looking to buy, this is a great time. And if you're looking to sell, it's a great time, because now you get the serious people that are there. And also, these people do understand, these buyers and sellers generally, that prices kind of tick down a little bit during the holiday seasons. So if you're in the market, feel free to reach out to me. Would just like to discuss that a little bit further with you. But looking at the 543,904, which actually I do apologize, there's a little bit off of my numbers last month, but nothing to really make it negligible. We're just seeing that we're going doink, doink, doink. And we're definitely getting that stabilization process. But let's go ahead and let's take a look now at the inventory and see if that's going to change. And why? Because as we know, it all comes down to supply and demand when it comes down to home values. So as we can see all the way back when the market correction hit, late May, early June, you see that huge spike in inventory that we got there in the blue line. And we could see that the buyer's demand just started ticking down. And really kind of why is because a lot of people were thinking, well, let me go ahead and let me hold on. Let me see for the interest rates to come back to 3-4%. Let's see what the Fed can do to kind of bring this down. Well, they kind of realized that the 3 and 4% weren't coming back. We'll get to that here in a second. But also, when the buyers started dumping out, there was a lot of inventory out there that kind of got left holding the bag. So what did it do? It created that market correction. And we also had sellers that wanted to jump out before things got really bad, and buyers that, well, they, again, were kind of waiting on those 3 or 4%. So we had just some interesting times that happened that created the market correction, but it was needed. We really kind of shot up. We were the fastest growing equity in all of the United States, rising at 52.7% over 2 years. That was huge. And we were also the first ones to experience the market correction. But as the pattern is gone, we're also really the first market in the US that is reflecting the upward swing, the change in the market correction that we're seeing today. And as interest rates got up, a lot of people were saying, a lot of sellers especially were saying, well, I really don't want to put my house on this market. Why would I want to go ahead and change out my 3 or 4% mortgage interest rate for a much higher interest rate, which really kind of like the average, it feels like the mortgage interest rates were around the 6s for 2023. And buyers were also seeing that too, as they saw that inflation was more entrenched and the Fed was taking more aggressive means, and we're going to continue to hold them that direction. So you saw a lot of buyers returning to this market to be able to soak up the inventory that really swung the other direction as sellers didn't want to sell. And we can kind of see that in the data as we're looking over through January to today. But we do see that uptick in the inventory. But look at how the inventories kind of just went, okay, when it comes to total single family homes here in Ada County. Now, they did tick up a little bit, but during the holiday season too, I kind of anticipate them to kind of dip down a little bit further. But we'll have to continue to see what's going on. But let's take a look at the sold data. We can see that the solds have been on the way down. And the other important one is that we're seeing that the pendings are on the way down. Now, do I think this is more of a seasonal deal that buyers and sellers are both jumping out alike? I kind of do. I think maybe the sellers are kind of tipping up a bit. There's maybe more out there that need to sell for necessity than just to sell to make a lateral move. But is it going to create that gap that we saw way back when we had the market correction and our buyers' demand basically dipped off? I really don't see that happening to that extremity to where we see a market correction continue. But we'll have to go ahead and pay attention and see what happens with the data. But for right now, it looks to be relatively at par. So overall, for single family homes here in the Treasure Valley, or especially in Ada County, we're sitting at 2.79 months worth of inventory overall, which is up from last month. Now, a lot of people say that a normal market too is sitting at 6 months worth of inventory. Well, I've said in previous videos too that that's kind of changed since technology has really implemented itself and things go a lot smoother in the real estate transaction process. Things kind of go quicker. So where is really the new norm? We're just going to have to go ahead and see what's going on with that and continue to monitor the data. But I don't believe that 6 months is really what you consider a normal market anymore. I'd kind of say that's a little bit under that, but I don't think that we're quite yet there to a normal market when it comes to our inventory. But let's go ahead and let's break it down by existing home inventory and new construction inventory and see what's happening here. So if we're looking at the existing home inventory, we can see that it started tipping down a little bit last month, but has kind of sideways itself and flatlined. But let's go ahead and let's take a look at the existing home sales. We can see both the solds sitting at only 380 and the pending line itself is on the way down. and kind of creating a little bit of a gap. So could there be and force, that issue to where we're going to see some price decreases in existing homes here in Ada County? We could. But is that going to be on a normal holiday basis? It very well could be. So we're going to go ahead and monitor that data too as well. But continue to watch, price decreases happening around, especially for existing homes, as sellers are trying to entice the buyers that are available out there with a very high interest rate right now, which just came down a tick, which is nice for us, but also the holiday seasons, and see what is going to happen. But either way, is it still going to be that extreme gap that we saw back during the market correction? You can see that that is just not the case in this data. But let's go ahead and take a look at new construction. So looking at new construction, we see the opposite. We see inventory coming back up. Now, one thing I have definitely said in my prior videos is that builders definitely can control their own inventory. Why? Because they'll sell off what they have as existing as, say, in a spec home out there, just being able to be bought up, ready to go. They were dumping their existing inventory, getting out of that, and retreating back to pre-solds, which means that you go pick your lot and then they build your home. That is a way for them to be able to control their inventory. But we can see here that the inventory has been kind of ticking on the way up. And if you look over the last couple of months, we see that the solds have been going on the way down. So some of those homes are getting back into those spectrums to where they're existing, which is something that a builder doesn't want to see. And if we're looking at the overall demand, you can see that the pending lines are going down too. So could there be some flex in new construction, as well when it comes to home values? There could in Ada County, and there still are builders out there that are offering incentives to be able to get, or concessions, shall I say, to get rid of their existing inventory as it stands right now. But again, could there be some room to flex here in terms of the pricing in Ada County? It could be. Is it a part of a normal holiday season? I kind of feel that way as compared to what I think is going to happen when the real estate market comes back online in Q2 of next year. But that we'll have to wait and see what happens and how the markets react, especially the buyers, to where we have mortgage interest rates right now. All right, and back to the section to where we normally play the game. Who was the biggest loser, or at least we've been doing that since the market correction, but made a little bit of a change here in 2023. Who was the biggest gainer? So now if we go ahead and take a look at what happened overall in the median home sold price for existing homes, we can see that we dive down just a tick for this month from the 532 that we had last month, which brings us down 1.49% overall. But if we're looking at that 475 line to when the market actually bottomed out in 2023, the overall for existing homes is up 9.35%. That's a crazy amount considering all the volatility that was happening in the markets with mortgage interest rates and buyers and sellers alike with their decisions. Just absolutely crazy. A lot of people are saying, hey, we got a lot more room to flex. Well, do we? The data is really kind of not showing that. But if we're taking a look also all the way back to 2022, when we're sitting in the 515-100 to today's 542 or 524, 50. We are up since then 1.7%. But since the market correction, when we're sitting at the 586,750 at the top of the mark, we're still down 10.68%. So there was some flex overall compared to what it was back then. But here is the biggest shocker. Okay, if we go ahead and we take a look at new construction, look at that. Bam, shot up to 580,000. Now, do I think this is a one-off? Just absolute kind of a fluke deal in the median home sold price for new construction in Ada County? Yeah, I do. I think it is. I think next month we're going to see something totally different going back the other direction. Got to remember, the median home sold price is the top price, bottom price, and that sold price right in the middle of it to say this is where the median is at. Average is a little bit different. They take them all up, average it up, and there you go. But if we take a look, that is one heck of a jump. So I've got the feeling there's probably more $1 million properties out there that we're selling than lower income properties out in Ada County, which kind of created this deal. So I do not anticipate the numbers to continue to skyrocket, but also the median home sold price in the market during the market correction for Ada County new construction held on for a couple months longer than any other category in both Ada and Canyon. But we're still down quite significantly if we're looking at the market correction when it was sitting at $690,000 to the 580 today, still down a whopping 15.94% since then. but really made up the gap. If you're looking at the 588, 945 from 2022 to what we got today, just down 1.51%. But don't hold your breath on that. I see it coming the other direction. But if we're looking from the 949, 900, when the market correction ended in January of 2023 and everything went on the way up, wow, boy, did that jump up, 14.67%. Again, hold on to that. We'll wait to next month, see what the data is looking like there. And looking from last month, quite a significant jump, up 6.89%. But again, just want to say it, already beating this with the dead horse, or beating the dead horse with this. I do not anticipate that 580 to hold at all. We'll just go ahead and see what happens next month. So who was the biggest gainer overall? As you can see, or the biggest loser overall would be existing homes, but the biggest gainer was definitely new construction. Boy, did that shoot up. That really, I had to check that number several times. I was like, there's no way that this happened, but it did happen. It did work out that way. Now let's go ahead. Let's take a look at the days on market. The days on market are starting to tick up, but not at really kind of a fever pitch that we see normally for this time of year. I mean, if you're looking all the way back from, say, 2021, 2020, it's just kind of ticking up, or even back to 2019, we're kind of slowly creeping up, which is kind of telling me that the markets are still healthy out here in the Treasure Valley. There's still an influx of people that want to move here, regardless of where the mortgage interest rates, etc. But also cash buyers have came out here more in droves than the mortgage buyers as of recent. So either way, because the Treasure Valley is a great place to retire, and most people know that. So, and on top of that, we're also the least regulated state in the U.S., etc. We are really what I've always said is a political boomtown. People want to move from the states that they are currently in to move here and get a taste of that freedom for themselves. But either way, if we're taking a look at it, we're just slowly kind of creeping up, which is unusual for this time of year, but we'll just have to go ahead and see, how this one plays out. But expect the days on market to continue to go up too as the holiday seasons come around. But let's go ahead and take a look at another health chart real quick and take a look at the cancels and expireds. And taking a look at this graph, and as I kind of figured I was going to see for the month of October, boom, the cancels went way up. And why did they go up? Because mortgage interest rates went up. In fact, during the month of October, mortgage interest rates started hitting into the 8s. Ouch. Wow. And considering where home prices are, you talk about the 80s. I hear this a lot. They say that, back in the 80s, mortgage interest rates got up to 16, 17%, in some cases. But you got to look at the home prices back then too. But if you're also comparing, the median incomes, all that kind of stuff, yeah, we're kind of, wishy-washy, with that overall. Are they still historically low at 8%? Sure, they are. But it still hurts the average everyday buyer that now has to spend so much more money just on the interest level alone for their house. But taking a look at this, I kind of expected the cancels to go up, plus the holiday seasons are here. So I also kind of see some sellers jumping out. And then also with mortgage interest rates getting into the 8% too, of course, they're going to jump out too. The sellers are like, well, I was thinking about selling for necessity. Now I really don't want to. So this is the way that I kind of figured that this was going to go. But the expireds kind of ticked down too, which is telling me that maybe there was just more sellers out there that are appropriately pricing their homes or being competitive out there in order to be able to sell. But overall, we can see that number went up. I anticipate that even next month to go up too. So we'll just have to continue to watch the data. But overall, the markets here in Ada County are looking decent for now. And we'll see what happens when quarter two comes around of next year. All right, Canyon County, it's your turn. Let's go ahead and dive into the stats. And as we can see right here, boom, median home sold price took a bit of a dip this month to the $399,999. Go ahead and say that one 10 times fast. And if we're going to go ahead and compare it back to what happened in January of 2022, we're still down at that mark when it was sitting at $424,900, which brings us down 5.86% since then. And of course, the market correction, which we know, late May, early June 2022, when prices were at its peak, started going the other direction when inventory really shot up and the buyer's demand really went down. Sitting at the 476,500, we are still down 16.05% overall in total single-family homes in Canyon County. Now, let's go ahead and take a look at the yellow mark when it's sitting at 395,445. That was when the market correction ended, which is January of 2023 this year. And we can see we were on that way up. we were on that way up. We took that dive down here this month, but still overall, we are up 1.13% in Canyon County in total single family homes for the year. Let's go ahead and take a look at what happened last month and see the patterns. And as we can see, this month, boom, really kind of shot down. So we'll just have to continue to monitor the data. I don't see Canyon County, especially when we get to the inventory slides, etc., really showing that price decreases are being the result of this because of an influx in inventory compared to the demand. But we did shoot down from the 415, 495 that we had the month prior, which is actually down 3.72%. But look at the months prior, okay? And if you watch these videos consistently every single month, you know that we were on the way up, ticking in. We stabilized, or we stabilized first, we went on the way up. We started back to our stabilization where we saw in May at 415, 405, 404, 405, 415 again, and now back this direction. If I was to make a guess at this, I would almost guess that it would come back up next month. We'll just have to go ahead and watch that data. But let's look at the inventory and see why I justify this. It's because, again, inventory has not shot up to levels that we had saw during the market correction, when everything kind of returned the opposite direction. Because remember, during the pandemic, we got down to 6 days worth of inventory. 6 days worth of inventory. That's crazy. And the buyer's demand was skyrocketing out here. And of course, that drove the prices up to be the highest equity growth in the U.S. overall. Absolutely nuts. But like I said, during Ada County, every action has an opposite and equal reaction. And if we're taking a look, the market correction we know hit late May, early June, to where the inventory just shot way up and the buyer's demand came down. And why? Again, because a lot of buyers were saying, 3 or 4% ought to maybe come back. Let me go ahead and wait a little bit. Or they got bumped out of their certain classes because they couldn't afford the increase in the mortgage interest rates. And then a lot of sellers got left holding the bag at that point. And then reality started even setting in for them. And they were like, oh boy, these interest rates are really high. Why am I going to go ahead and get rid of my 3 or 4% mortgage interest rate that I got? So they went in and took their houses off the market too. And we can see that even the inventory went back down to levels. Now, buyers and sellers are still trying to figure that out. We had that change in 2023 because buyers saw the writing on the wall, just like sellers saw the writing on the wall too, said, we might as well do something here real quick before mortgage rates continue to go up. And that actually happened, especially more in the buyers drove, as they're like, oh boy, we want to get in there. And the inventory keeping down low because sellers didn't want to sell created that increase that we saw throughout 2023. But if we're looking at this chart, we can actually see, if we're looking at this sold line sitting at 328 homes that actually sold, but look at the pending line. The pending line has been on the way down. So it's showing that the buyer's market is kind of softening. And if we look at this month, we've actually had a jump up a bit. 857 homes available for sale total overall in Canyon County. But is that gap, again, going to get back to the point that we saw during the market correction? I am not anticipating so. And some of this too as well, the decrease in the buyer's demand is coming because of that holiday season coming around. And we're seeing in some cases, as we get to some of the other slides, that even the sellers are going the other direction too as the holiday seasons are here. So as we lull through the slow season, Q4, Q1, up until Q2, I'm anticipating more of a stabilization trend in Ada County and even in Canyon County here than an overall growth pattern. If anything, we might go down a little bit, as we have seen some price decreases start up around the cities around the Treasure Valley, which I'll get to a little bit later. And here is that proof in the pudding. If we're taking a look at the existing home inventory, we can see that the existing home inventory is swinging the other direction, down to 406 available homes for sale out in Canyon County. Why is it swinging that direction? Well, more or less because of the holiday season. And then also on top of that, the mortgage interest rates. People are like, wow, now I really don't want to sell my house because it's at an 8%, or it was for, some moments there, some good moments in October 2023. They're like, well, wait a minute, why now am I really going to sell for necessity when I don't have to? But look at that buyer's demand too. It also took it out on the buyer's demand. There it went. And you can see the pending line went down. Sold is only sitting at 191 homes that actually sold, which pushes at 2.61 months worth of inventory overall, or 2.12 months worth of inventory in existing homes, 2.61 overall in total single family homes for Canyon County. But Again, the inventory is coming that direction, not going up to that huge peak or anything resembling that huge peak that we saw when the market correction hit. So if anything is going to happen here, maybe some slight price reductions, but the data here when it comes to existing home inventory is not showing that we're going to return to the level of degree of market correction that we saw. And we'll just have to see what happens when we get out of the holiday season, get on the other side, get into quarter two, see what the Fed kind of does too, to maybe make the markets react a little bit differently, which I'll get towards the end. But as you can see here, existing home inventory should be holding on decently. Now, how about new construction inventory? Well, as we can see, the new construction inventory shot up. Okay, as we can see that the buyer's demand started ticking down too. So there wasn't a lot of buyers. Again, holiday season, high mortgage interest rates, etc. Even the concessions maybe were just not enough to be able to get particular buyers into that house that the builders were offering. But we can see that the inventory is shooting up, but the pending line is still above it for now. So there's still a lot of inventory that is sitting there waiting to be closed in new construction overall in Canyon County. But is it going to, again, get to that kind of point to where I see that the buyer's demand and the gap of the inventory is going to create a level degree of market correction? Well, if we actually break down the new construction slide, this could maybe happen, all depending on whether or not the pendings continue to go down, and say maybe even into quarter two of next year if they continue to go down. Because if you look at the inventory levels to where the spikes were, and you look at where the buyer's demand is right now, this is kind of indicating that maybe new construction out in Canyon County might have a little bit more room to flex. So if you are looking for new construction out in Canyon County, which is cheaper home prices overall, if you're looking over there as compared to Ada County, well, we could generally see that. But we'll just have to go ahead and pay attention. But of course, during the holidays too, always have to mention as the buyer's demand ticks down, seller's demand generally ticks down too. We can also see prices come down a bit just because of the holiday swings in themselves. But either way, I want to continue to take a look at this data and see how it's going to swing out. But for right now, new construction overall is looking relatively decent. And let's go ahead and take a look at that. And here's where the proof is in the pudding. If we're looking at the overall median home sold price and what we've been seeing happening. And let's go ahead and start off with new construction. So normally play, again, the game, who is the biggest loser? And this month, as we can see in the new construction, we're sitting at 421,514, which is down from the 429,990 that we had the month before, which actually puts us down 1.97% since then. But if we take a look at the lines, look at that line. It's going relatively steady, kind of up and down as we've been going around in new construction over here in Canyon County. And if we're actually looking since when the market correction really ended, the low point right there in about April of 2023, when it's sitting at 405,895 to the 421,514 that we've got, we're up 3.71% overall. So some gains have returned to new construction here in Canyon County. But let's look at all the way since back in 2022 when it was sitting to the 465 down to the 421,514. We are down 9.35% since then. And of course, since the market correction when it was sitting at 549, we're down 23.22%. Boom, big drop. And in fact, if we go back to previous months, Mikey's monthly market updates, you can see that even Ada County had those big drops until that really kind of weird 580 that we got this month, but just kind of crazy stuff. Let's go ahead and take a look at existing homes. And with existing homes, same kind of trend. Boom, kind of went down a bit here to the 389,500 from the 399,990 that we had. So you're looking at, roughly about $1,300 drop since we had before. But again, take a look at the line when it comes to existing homes. It's staying relatively flat, coming down a bit, which I have said. Also, it is holiday season. Mortgage interest rates did go up, but mainly I would think because of the holiday seasons that our prices are probably coming down a little bit as traffic is reducing itself. Inventory is relatively reducing itself too. Not new construction, but we know in the existing homes out here. But relatively, we're staying kind of stable, and I don't anticipate too much of a drop overall. But, during the holiday season until we get to quarter two of next year and see what happens when people decide to return. But if we're looking from the baseline from last year at the 390 to just down the $500, that's negligible. And if we're looking since the market correction, we're sitting at 425 to 389,500. We're sitting down 8.35% overall in existing homes. But from the 339 that we had at the lowest point, January of 2023, when the market correction ended and went on the way up, it is up 12.96% since then. That is a huge, huge jump for existing homes in Canyon County, which ought to make sellers very happy. Minus the mortgage interest rates, of course. So how healthy are the markets doing overall? Well, let's go ahead and start taking a look at the days on market, especially when it comes to Canyon County. And we can see that the days on market actually kind of jumped up pretty decently, since the last month. But I anticipate this during the holiday season as buyers jump out. So do some sellers jump out because it's just the holiday season. So it is kind of back on the way up. But again, not kind of skyrocketing at some levels that we've kind of seen in the past. So we'll just have to continue to watch this with the days on market. But so far, so good. This is the one that is really kind of dictating what is happening out in Canyon County. And of course, that's going to be the cancels and expireds. Now look at the cancels. Boom, way up since the previous month. And of course, mortgage interest rates were definitely an issue with that. Sellers, contracts, everything just kind of changing. Maybe some buyers just couldn't qualify anymore, considering where the rates were. And then buyers or sellers just got some really cold feet and said, now I'm really not going to make the move because the mortgage interest rates are just out of control. But either way, I expected this to happen over the month because of where the mortgage interest rates were happening. And boom, the cancels went way up. Plus, grab that with the holidays. With the holidays here too, we're going to see sellers canceling out. You're going to see maybe even buyers canceling out, saying, you know what? I'm just going to go ahead and dump out and wait and see what happens. Also, expireds kind of ticked up a little bit, which is letting me know that there's still some sellers out there that are really kind of holding on to the price or not properly, appropriately pricing their house in order to be competitive in today's market. So I'm seeing that go ahead and tick up. But this is also a number that I anticipate to kind of go up, especially over during the holiday season. Now that mortgage interest rates have come down a bit, we'll see what kind of happens with that. But they are still high, and we'll just have to monitor and see what's going on. But overall for Canyon County, really kind of nothing out of the norm yet that I'm seeing, maybe in the new construction field. But overall, I'm kind of seeing it being on the track is what I anticipated to kind of happen over the holiday seasons, which is going to be more of a stabilization or a touchdown until in median home price, until we see Q2 return next year and the buyers start coming back. So we'll just have to see what's going to go on with that. Okay, so the section is here now, the big elephant in the room. And this is where I kind of go ahead and talk about what could happen because of the way that things are currently and what's on the table to possibly create massive interruptions, maybe in the real estate markets, overall the entire United States. Now, of course, I love it when you guys comment, so please comment below. I'd love to hear what you got to say. I love the guy last month that went ahead and commented, really kind of put some good perspective. He's also got, he had his overall thoughts, that the markets are still going to kind of crash overall. But if we kind of take a look at that, how so is that going to be the direction? A lot of people still think that, 2008 here is relatively looming itself. Well, let's take a look at 2008 first off, and why did that happen? Well, 2008 happened because of really the subprime mortgage crisis. People were getting loans for just having a pulse. It didn't take a credit score, didn't take any checks on their income, it didn't take anything. It said, here you go, here is a loan. And it was underwater from the get-go. And then there was fraud going on behind it when they were selling these loans off to secondary mortgage bank security companies like Fannie Mae, Freddie Mac. Okay, they were going and selling these D plus rated loans, really. Of course, I don't know really the terminology in mortgage. Talk to a mortgage professional at that, but they were selling it at A-rated loans and they were already underwater. So of course, we knew that bubble was going to burst. But right here, as we can see by this, inventory levels are really kind of staying on par. A lot of sellers out there do not want to sell right now because the mortgage interest rates are high. And I've said that a million times over, is that sellers are selling out of necessity now than just wanting to make a lateral move to get to something different. And buyers are feeling that pressure too. So overall, what do I see is going to happen maybe happening in 2024, if anything, is I don't see inventory spiking way up here and buyers demand going way down here and creating a continued market correction like we saw. What I see is both patterns maybe go in the same direction to where there's just not as many transactions in real estate. And why do I say that? Because of how the Fed has reacted lately. Well, with their last SEP predictions, which the next time they have a meeting, they should come out with another SEP prediction of where they think the federal funds rate is going to be. But the last time that they did it, they scared and panicked the markets by saying, well, you know what? We planned on going down 100 basis points in the federal funds rate, which does not control mortgage interest rates directly, but does have a ripple effect to the 10-year Treasury and MBS, which does. But either way, they said, well, we're going to go ahead and lower the federal funds rate by 100 basis points in the meeting prior, or the 2-month meeting prior before that. But this last SEP projection that came out said, well, we're only going to do it at 50 basis points, which would really do nothing to make the Treasury markets or the MBS markets feel all that comfortable. Now, the last 2 meetings, though, instead of doing the quarter point hike, which some of the members wanted to do, the last 2 meetings now, the Fed has actually put a pause on the federal funds rate. And they're giving more breadcrumbs. They're throwing more breadcrumbs out there as the data is showing them things that they may not actually do it. They might just hold it longer and hold it throughout 2024. So what can we kind of expect with mortgage interest rates, I would say over 2024, is to go down a bit, but I wouldn't say anything significant enough to where a lot of buyers are going to jump back in. If anything, the rates might get back into maybe the high 6s, maybe 6 3/4. But again, I don't have a crystal ball, but that is just my prediction of what's going on. But recently, there's also some articles talking about the effects of the recession finally hitting in early of 2024. Now, I know probably all of you are saying, well, the data is showing that we are in a recession. Well, the data is showing that we're in a recession historically because of all the indicators that are just throwing red flags, like the inverted Treasury yield curve. People are taking a look at that and they're saying, oh my gosh, that's a primary indicator of recession. Well, sure it is. Absolutely. But have you noticed the Treasury curve lately? The longer term yields are starting to go on their way back up, which is maybe indicating that we can start getting back to a normal correction in our normal Treasury yield curve. Interesting. So can the Fed come in for a soft landing? But if that, say, the effects of the recession actually hit, well, what is that going to force the Fed to do? It's going to force the Fed to lower the federal funds rate, use tools in order to protect the country from full-blown recession. Like when we saw back in 2008, when the Great Recession hit, we saw that unemployment jumped up to 10%. Now, I don't know about you, but I've read a lot of articles out there to where people still just have theories on why unemployment went up to that kind of high level. Please comment below. If you got an article for me that actually proves it, please give it to me. I'd love to see why they were able to correlate the two. I have read some that said, yeah, there's some correlation here. But here's the one biggest thing that the Fed cannot cut down with the federal funds rate is employment. They can't cut it down. The unemployment levels are not reaching the levels that they predicted is going to happen for this year. In fact, the job markets have been quite resilient, and that is just a thorn in the side of the Fed. They hate it. Everything else seems to be relatively falling in line, including supply versus the demand. You see that actually you see that the currency out there, the currency levels out there in the public is coming back the other direction. And you can see that even the inversion curve and the Treasury yields is starting to go the other direction. So it's showing some positive signs to the Fed, even though it's kind of looking entrenched, but they still can't get rid of employment. And that's one thing. They would love to put you out of a job in order to be able to, correct this. But if a recession hits this time through, do I honestly think that we're going to see a 10% unemployment level? I'm going to go ahead and say no to that. And I still think that people will be able to hold on. And here's the other thing. is the equity that most homeowners have in their homes. Now, most that bought at the top of the market, especially when the market correction just before it hit, could be the ones, in trouble, especially if they go ahead and lose their job too. In fact, if anybody loses their job, they're going to go ahead and be in trouble of losing their home. So either way, even if the effects of a recession hit, I do not anticipate unemployment to get out of whack enough to where people start losing their homes. But of course, we got to think back to why 2008 happened in the first place, and it's because of the subprime mortgage crisis. And then people started losing their jobs. Whoops. It was just whammy, whammy, whammy. It was not a good thing. Do I see anything on the indication table looking that direction for homeowners this time through? No, I don't. And actually, if you take a look at this graph, I want to go ahead and point this out. Look at this. During most of the recessions, minus the Great Recession, which homeownership costs, subprime mortgages cost, look at how homeownership worked out. So either way, something really to kind of think about. What about one of the biggest threats? Well, two of the biggest threats, shall we say. Let's go ahead and let's talk about possibility of World War III. Oh boy. Okay, now this is something, that I just hope that doesn't happen. I hope it doesn't happen either. That'd be terrible for our country to get involved in a couple of major wars that are happening around the world right now. But of course, we're spending and throwing more money at it, printing more money. Now, instead of sending money over to Ukraine, we're also sending aid, which is not as much as what we're giving to the Ukraine, but we're giving aid to Israel. What's going on? And what we can anticipate that to happen is our deficits to be on the way up. And when our deficits are on the way up, what does that open the door for? Which it has been opening the door for, is a challenge to our currency overall, which has been happening. And the BRICS nations are getting more emboldened as it goes along. Now, the BRICS nations have taken some hits. Recently, China took some hits when it came to trying to take over our dollar. Saudi Arabia, I guess, got some cold feet in between there too as well. But that is still looming out there. The more that we put ourselves in a deficit, the more that we spend and spend and spend and spend, the more that it opens up the door for them to be able to challenge the strength of the US dollar and take over the status as a world reserve currency. And if we do that, or if they were able to do that, that is not good for any of us. Welcome to the poorhouse, everyone, because that would be the way that it goes. So we definitely need to elect good leadership coming through this time to be able to stop that from happening and focus on America first. But back to World War III, we definitely don't want something like that. If we were to go back to, say, World War III, well, again, I think the writing would be on the wall there. But these are two major things that we definitely do not want to happen just so we can get a cheaper home price. That's not going to be a good thing. All right, now we come to the section of the best strategies to be able to go ahead and buy, sell, invest, or even if you're renting out here in the Treasure Valley, we'll go ahead and discuss that. But let's go ahead and talk about some of the best strategies that you can do right now if you're looking to do any of those things. But buyers, let's go ahead and start off with you. Buyers, yes, mortgage interest rates, they're on the high side. And I'm sure a lot of you are feeling that pressure, or you're on the fence until the mortgage interest rates pushed you out. Per se from the markets, from being able to get a home. And of course, the fact that our home prices doubled during the pandemic, but have come down a bit since the market correction to kind of a little bit more of an even playing field. In fact, I kind of got some statistics here that growth per year since really the pandemic picked up in Ada County has been about 10.19% in Ada, 10.57 growth per year in equity since April of 22 in Canyon County. So we have still been on the higher side. And I'm sure that you've probably seen some articles out there that are saying that we're the most overvalued market in the US. Well, when you think about that, they're basically kind of instilling into you saying, oh, we got more room to flex. Well, if you've watched this video all the way through and you look at our supply and demand right now, it's really not showing that we have more room to flex. In fact, actually quite the opposite. If we do flex a bit, it's probably going to just come during the holiday seasons. So if you're in the markets right now, the holiday seasons are always a good time because you have a really motivated seller if they're going to keep their house on the market during the holidays, especially. And that means that you're serious to coming through as a buyer, and you might even get that cheaper price. If you just continue to watch the mortgage interest rates, they have dipped down a bit. If you're looking to reach out to a mortgage professional to start that foundation today, feel free to reach out to me. Be more than happy to hook you up with the best here in the Treasure Valley that'll get you from point A to point Z. But either way, The data here, if you're sitting here still waiting on some sort of a crash or 2008 to come, or this looming recession and the effects of it to really hurt this nation, to bring it like a 2008, again, go back to the big elephants, but I'll go ahead and put up the graph here again. Where during other recessions previously, minus what was created by subprime mortgage crisis in 2008, really affected the home industry. So keep that in mind. What do I anticipate for Q2 of next year? I anticipate buyers' demand, regardless of where mortgage interest rates are, to continue to come back. And why? Because people need housing. But if you're waiting for mortgage interest rates to get back down to fives, or maybe you have to, when they get into the fives, which they could very well happen in 2025, if they get back into the fives, you can anticipate that the buyer's demand is going to shoot through the roof again. And will the inventory be there to keep up? My guess is no. And at that point, we could see home prices go through the roof again on, like, say, another pandemic level. So there's a lot of experts out there that are saying that, hey, be careful what you wish for when it comes to getting a lower mortgage interest rate. But are the mortgage interest rates high? Sure they are. But remember, you marry the house, date the rate. And I've heard other panic channels saying, oh, this whole marry the house, date the rate thing. Oh, no, keep holding on. Things are going to go, down. Where? So either way, buyers, I just want to go ahead. I want to put that and instill it into you. I think that our market is going to be relatively healthy, minus if we go to one of major two things, World War III, or we lose our status as a world reserve currency. And at that point, that's not good for a cheaper home price. So either way, but buyers, if you are looking to succeed right now, like say you're in the market and you're like, man, these mortgage interest rates are going to, just kill me. Well, there's an option out there. It's called the 2-1 buy down. And it's actually cheaper if you're, say, going after a new home, or you're going after an existing home and now able to get you a concession, or the builders are offering those concessions. Then we can go ahead and use that to be able to use what's known as a 2-1 buy down, which is really, really good, effective strategy. I'll put the video towards the end again. The end. Please click on it so you can go through it in its entirety. But basically, as this works is that you'll go ahead and buy down the rate 2 points for the first year, 1 point for the next year, and then return back to baseline. And according to all the data and what even the Fed is saying, is that they expect to really start chopping the federal funds rate by 2025. Now, federal funds rate does not control mortgage interest rates directly, but it does affect the 10-year treasuries and MBS, which does. And as those markets start feeling more comfortable, the mortgage interest rates are going to come down with it. Will the rates ever get back to a 3 or 4%? No, and not with the quantitative tightening going on. The reason that happened was because of quantitative easing that they did for the last 10 some odd years, where the Fed themselves was going out and buying up the treasuries and artificially floating our economy. That is not happening anymore. And in fact, because they're doing the quantitative tightening and they have about $8 trillion left to go, they can continue to do this for years and continue to keep mortgage interest rates on the higher end. So if you are anticipating 3 or 4s, I'm going to tell you, get off that fence. If you are looking for the 5.5s, well, you're just going to anticipate buyers to come back, because this is now the new normal, to where people are starting to realize that. But if you have the means to be able to go in there now, consider the 2-1 buy down, because the 2-1 buy down should be able to get you into when everything just kind of goes the wayside here in the US and returns back to normal, and you can go ahead and refinance there. So if you like to talk more strategies, or you are looking to purchase a home and I can go ahead and set you up on a search, I'd love to hear from you. Feel free to give me a call, shoot me a text, send me an email. Love to get your parameters to be able to go ahead and set you up on a search, and also be able to get you in touch with a loan officer to be able to start setting the foundation to make that home purchase and get right here to our wonderful area, the Treasure Valley. All right, sellers, your turn. All right, well, of course, again, I've said it in many videos. Why do you want to sell right now? Really, you don't, especially if you're at a high 2, 3, or even 4% interest rate. Why are you going to go ahead and get up and move for a mid-7, high, 8, or even low 7 interest rate right now, which probably won't change until, next year? You're not going to, unless if you have to sell for necessity, like say your job moved or your family grew, etc., along those lines. Then I could probably understand it. But other than that, if that's not happening, you're going to not do it. You're not going to get up and uproot yourself. It's just going to cost you more money in the long run. Maybe you're waiting for prices to head back up in the upper direction. Well, they are. If you are, though, they're probably going to tick down a little bit during the holiday season, which is a standard for this time of season in real estate. But we'll just have to go ahead and see what happens in quarter 2 and see what filters out with the mortgage interest rates coming up. But sellers, critical, the best strategy for you is to go ahead and properly price your house in today's market in order to attract the buyers out there, which is on the decline, as we can see. Holiday season, higher mortgage interest rate. So is inventory in some cases, which is limiting your competition because of the same factors. But either way, you appropriately pricing your home in today's market and absolutely marketing the daylights, which I love to do. And I'd love to set up that meeting with you to go ahead and talk about it, maybe for 15, 30 minutes. Or if we like to become chatty Cathy's, it could be a little bit longer. But set up that appointment and show you the tools and everything, all the strategies that I've got set up to be able to go ahead and sell your house for the most money and sell it in the quickest time possible in today's market. So sellers, if you are looking to move out of necessity, most likely, I look forward to your phone call. Shoot me a text, send me an email. Would love to be able to set up that appointment with you or just discuss some things over the phone real quick. If you are looking for home valuations too, please feel free to visit my website at mpre.homes. Click on the tab valuations and get an estimate just based off an AVM of where you're at. But if you are looking for a CMA to know what's going on, love to set up that appointment with you to be able and put things a little bit more in perspective. So sellers, I look forward to hearing from you. All right, investors, your turn. Well, if you're investing and you're using a mortgage, of course, it's probably not going to be the best of all deals for you right now, considering where mortgage interest rates at. Because if you are going after, say, a secondary property, your mortgage interest rate is going to be higher than it would be on your primary. So if you are looking to know where your mortgage interest rate could be, I got great loan officers all over the Treasure Valley I'd love to put you in touch with so that you can know where you stand on that if you're looking for that secondary property. But of course, the more money that you can throw down right now, if you're looking for secondary properties to invest or multiple properties to invest in, the more money you can throw down, the better your capitalization rate is going to be. And of course, if you're coming out here and buying in cash, of course, cash is king if you're buying it off in full. And right now, as we can see, the prices have been steadily going up in 2023. Will they probably come down a tick during the holiday season? Sure, that's historically happens. We'll just have to continue to watch the data. But next year is what's going to make me very, very curious. And I actually anticipate prices to either stabilize themselves or continue to come up. Do I see a continued market correction in the data? As you can see from what I'm looking at, not yet. Okay. And do I anticipate inventory to shoot to the moon again next year, considering where mortgage interest rates are and buyers' demand to shoot down to that level that we had during the pandemic? No, I just don't see it. But investors, if you are looking right now, it's probably a very interesting time for you. But again, the best, of course, way to hedge against inflation is going to be real estate overall. Even though our inflation has come drastically down, which is very, very nice from what we had, but it's a good thing also to do. And I've always said this a million times over too. If you want to get the most bang for your buck, the most return on your buck, then it's going to be in real estate. And as I mentioned, over for the buyers, if we're looking, this is after the market correction took hit all the way from, pre-pandemic to today. If you're looking at the growth that we have seen, Ada County, we're looking at 10.19% per year in equity growth since the pandemic. So since April of 2022, it has gone up that steady. And even I always say Canada because I live next to Canada Road, but no, it's Canyon County, up 10.57 per year since the pandemic, even after the market correction. So our market out here definitely has got some awesome opportunities to be able to get some good capitalization rates and to be able to make some great equity growth. So if you are looking to invest out here, feel free to give me a call, shoot me a text, send me an email. Would love to be able to start that process, send you over some numbers of properties that you're looking at, and be able to set up the best situation for you in your secondary properties or your investment properties. So I look forward to hearing from you. All right. And last but not least, renters, your turn. And like I say, every single month, renters, you're paying 100% mortgage interest rate. That's right. You're not seeing any equity. You're not seeing any of the growth that has came this year from the end of the market correction on the way up. Now, I get it. You're probably renting. You're like, mortgage interest rates are high, or I don't have enough for a down payment, or I don't have this, or I don't have that. Well, this is the key. You probably hear from a lot of people. You say, well, you need 20% down, or you need this, or you need that. Not necessarily. Call a loan officer, a mortgage professional today if you are thinking about getting into a home to be able to set the foundation. Even if you're like, well, mortgage interest rates are high. Well, yes, they are. Okay. And will they be coming down maybe just a tick next year? Sure. The year after that? Sure. Maybe a little bit more. Maybe it might return back to what will be about the new normal, which should be hovering somewhere in the fives. If you're looking for the 3 or 4% to come back renters, just like I said with the buyers, don't anticipate that. There's nothing out there that's going to say that that's going to happen. The days of quantitative easing are over. It's back to quantitative tightening for the Fed, and they could keep it that way for a while. So either way, just want to say, if you are thinking about that move, start setting the foundation. And the first key is always going to be talking to a great mortgage professional. And of course, talking to a realtor like myself. I'd love to represent you in your transaction to be able to kind of set what is going on. And also continue to watch these videos and stay in tune with what's happening with the market. But as I said, with buyers, if you're waiting for something to crash, again, too, I wouldn't anticipate that to happen. There's really nothing on the horizon, minus 2 major nasty things that we don't want, like World War III, or losing our status as a world reserve currency that can bring something like that along. And would I anticipate a recession, the effects of the recession, to be anything like a 2008? No, I don't. Please go back to the buyer section, take a look at the graph, or even the big elephant section. But either way, renters, love to be able to speak with you, talk about that. Remember the 2-1 buy down program too in the buyer section. Please rewind back to that. That's also available for you, because I would really think by 2025, things should start getting back on track with the economy here in the United States. So we'll just have to go ahead and continue to monitor the data. But renters, if you are thinking about taking that step, getting to home ownership, feel free to give me a call, shoot me a text, send me an email. Would love to hear from you. All right, again, thank you again, everyone, for taking the time out of your day to watch this incredibly long video. Say it every single time. But I hope that you got some really good information from this. And please hit that subscribe button below if you want to stay in tune. Click the notification bell so you're constantly in tune with the videos that I do come up with. So that way you're in the know of what's happening. And of course, don't hesitate to reach out to me with any questions. I love them. Or comment below and leave your questions there. I'm very responsive to that. But give me a call, shoot me a text, send me an email. I'll be more than happy to discuss this with you in a little bit more detail. Or if you're looking to start making that journey to buy, sell, or invest right here in the Treasure Valley, would love to represent you in your transaction there too as well. Well, please, if you also like this, give me a thumbs up. Please share it with somebody that you know could really use this information too. But I look forward to that day that we speak, everyone. So I wish you all a happy holiday season. Have a great Thanksgiving, a good, safe one. A Merry Christmas too as well. Happy New Year to you. Of course, I will still have videos coming out in between that time, so please subscribe. But either way, I just want to say from the bottom of my heart, have some great holidays. God bless you all. I look forward to the day we speak. I look forward to the day I call you my neighbor. Until then, God bless. Bye-bye.